Hi, I'm Sam Meredith. Today we're having a closer look at the UK's economy amidst a flurry of data released this morning. And so joining me is the Director of the Centre for Economic Performance at LSE, John van Reenen. So John, UK inflation rebounded from a 55-year low this morning as prices rose in May for the first time since October. But how would you assess the overall economic health of the country?
So on the inflation numbers, the bottom line is inflation is basically kind of flat, zero at the moment. And the main reason for that is international factors. So the very low price of oil has been a major contributing factor in how that still works for the rest of the economy. So the low inflation is nothing to be fundamentally worried about because it just reflects internationally low prices. There is a concern lingering in the background over the slowness of the recovery, which is still Britain and other countries around the world have underperformed since the global financial crisis. And I guess a particular fear is deflation in the Eurozone, which being Britain's main economic trading partner, about half of all exports go there, could contribute towards slowing of demand and some imported deflation from there. But overall, good news because low prices mean higher real wages, and that's a good thing.
Standard & Poor's rating agency has cut its outlook for the UK because of a planned referendum on EU membership. The outlook has been shifted from stable to negative, although its rating remains the same. However, what sort of impact is this likely to have on the economy?
Yeah, so we should be realistic. The credit rating agencies haven't been, the best economic forecasters of what's been happening in the economies, and we saw in the global financial crisis. They before that they were giving very high ratings to countries and companies who then performed very badly. However, having said that, I think what the rating agencies are saying is that the decision to have a EU referendum is a kind of risky thing for the UK. It increases the amount of uncertainty that investors face. So in particular, if you thought about a company thinking of locating in the UK or having its headquarters in the UK or part of the UK, its concern is if the referendum was that Britain was going to leave the EU, that would make Britain a much less attractive location for foreign direct investment because one of the reasons that many firms come to the UK is as a platform for accessing the rest of Europe. So I think what the downgrade suggests is that there is a major concern that if the vote does go to leave the EU, that would lead, in my view, to very negative effects on the UK economy. We have estimated, some of the effects from the loss of trade alone could knock, say 3% of GDP. So those are not trivial amounts of output to lose. And I guess the fear of that is what's driving the agencies to downgrade the UK.
The OECD have revealed that Britain's coalition government slashed spending as deeply as countries embroiled in the Eurozone crisis between 2009 and 2013. This seems to further highlight the scale of the challenge for the Conservative government. But 1 month after the general election, how are you expecting the UK to perform economically moving forwards?
Well, I think the UK has done well over the last year, and I expect it to continue to improve if things don't go too badly in the Eurozone and the US. But looking over the last 7 or 8 years, it has been a very poor overall economic performance for the UK. So if you looked at where we'd have expected to be before 2008, we're now our output, national income per person, is about 17% below where we'd have expected it to be. And that reflects the slowest economic recovery that has happened certainly since the Second World War, perhaps even this century. Looking forward, if the government can stick to its plans, which is to have a renewed burst of very sharp cutbacks of public spending, then this will be a kind of a drag on the economy, especially if those cuts of public expenditure repeat the mistakes of the 2010, 2012, and mean that we have a lower rate of public investment in roads and schools, hospitals, infrastructure that we should be having. So I think on average I'm an optimist. I think that the UK economy will continue to grow strongly, but I think that it's going to be very difficult for the Conservative government to manage to implement the scale of spending cuts that it's promised, given that the size of the cuts has already happened. And I suspect that what will happen is there'll be some easing off of those plans, as happened in the last Parliament.
Thank you for joining us, John. Be sure to check back with Dukascopy for more updates throughout the week. Goodbye for now.